So my name is Marius Oosthuizen. I'm a member of faculty at GIBS, and we've had a session today, a masterclass on strategic foresight, specifically for the finance industry, for banking, insurance, and the services industry around those two clusters. We've been looking today at the impact of things like robotics, artificial intelligence, the way in which now with technology and electronics becoming embedded in cars, in movable objects, in transportation, the way in which that is going to change the way we think about data analytics. Of course, this has major implications for banks. Insurers are starting to understand that they can understand the risks involved in their products, in their customers and the movement of those customers, and begin to use that data analytics to change their business model. We've been speaking about the way in which internet connectivity around the globe, things like big data, cloud services, will disrupt big banks, big services industries that are reliant on large infrastructure, that rely heavily on their legacy systems. And I think the big insight has come that strategy for banks and for insurers going into the future will really be all about agility. It'll be about how do we use our talent, how do we use our systems in a more agile way, how do we produce services and products in an iterative way much more regularly, how do we get them to market quicker. And we're seeing that these big banks, big insurers are being challenged by fintechs, small players who come into the sector, who don't have the legacy systems, who don't have those expensive business models that can take new and innovative products to customers quicker. We're seeing them be challenged by those. Of course, there's a big change around the role of robotics within businesses, not just actual robots, machinery, but also chatbots that can do statistical analysis, that can do customer services, and that can form the front end of a customer experience. I think the big challenge over the next couple of years is going to be the decision of how much time, energy, resources our big organizations, our big traditional retail banks, business banks, spend on transforming their business model. Certainly the entire value chain of banking is changing, where banks were able to make their money on costs and fees in the past. Banks increasingly have to think more like ecosystems, get into business with telecommunications companies, with healthcare providers, and think about making a revenue on untraditional or non-traditional products associated with their service. And I think organizations like Facebook, in social media, organizations like Amazon, Alibaba, other platform businesses are probably very well placed to provide the same kind of services that traditional banks and insurers have provided to the market, of course doing so without the bricks and mortar branches, etc. I think the question from a strategic timing point of view will be how rapidly the customers are willing to adopt new technologies, how rapidly do they shift from traditional banking methods onto much more digital, virtual orientated services. There is great competition already between our banks, but I think looking into the future, we see this competition becoming much more rapid, much more aggressive as different banks, different players, even non-traditional players enter the market to provide the same kind of services.